Even as a deal for TikTok solidifies, the U.S. and China have not yet come to solid terms on tariff rates. But don't tell that to Chinese stocks. This entire year, as the U.S. and China circle each other in this trade negotiation ring, ready to throw a punch or shake hands at any given moment, Chinese equities have soared. I mean, if you look here, BYD, the electric vehicle company, up 33+% year to date. You've got Tencent up 55, call it 56%. And Alibaba up 93% this year. But just a month ago, it was 36% cheaper, which was precisely when our floor show guest appeared on this show and told you to buy it. That would be Tom Hayes, chairman of Great Hill Capital. And great to have you, Tom.
Thanks so much.
Well, what did you see then that kind of told you that that could be the case?
Well, Liz, we were on over a year ago telling people to buy it in the 80s and 90s, and everyone looked at us like we had three heads because China was uninvestable. All the sell-side banks were downgrading China. Here's what we saw. We saw $80 billion of cash on the balance sheet. We saw $25 billion of free cash flow. We saw a toll taker on the Chinese middle-class recovery. We saw the #1 cheapest AI play in the world. Not only do they provide the compute power, have 40% of the market, but they have stakes in every single AI company in China. When they say we need compute power, they say that's fine, just give us equity. So Alibaba was the cheapest way to play AI around the world.
Plus, Alibaba has come out with its own chatbot that seems to be very successful. That brings me back to the tech story today, NVIDIA, OpenAI. I mean, this is a massive, massive deal that could involve the need for millions of NVIDIA chips.
It's insane. I mean, a 10-gigawatt deal. The AI industry is writing checks that the energy industry can't cash, okay? 10 gigawatts is enough to power 7.5 million homes. That's the amount of energy that's going to be required. So we start to look at what are the derivative ways to play the demand for energy that's going to be fueled by these type of projects. You know, to put it in another perspective, 10 gigawatts, 45,000 football fields of solar panels to power 10 gigawatts. So the unending demand, data center demand is going to go up 165% by 2030. 60% of that is going to be powered by natural gas.
So what's the covert play, if you will, when it comes to energy?
Well, first thing, energy right now is the cheapest sector in the S&P 500. It's trading at 15.2 times earnings. What most people don't know is that they're going to have among the highest earnings growth next year, 17% earnings growth. We love Comstock Resources, biggest player in the Haynesville Shale, and they're close to all the export terminals and the liquefaction terminals. Jerry Jones owns 75% of this stock.
Jerry Jones of the Cowboys.
Yeah, trading at book value, proven reserve, 10-year reserves about $5.7 billion. The problem is they have 30 years of unproved reserves. This could be a $45 stock from 16 over the next 3 years.
Okay, and what I check these things because I don't want our viewers buying at the top, but Comstock is actually down 38% quarter to date. So at least they wouldn't be buying it at the very richest part of the curve.
No, you're buying it at liquidation value effectively right now. So as they start to benefit from all of these years of unproved reserves, which they don't have to report, they only have to report PV10, that value will be realized in coming years.
Why do you suppose energy has the lowest forward 12-month PE of any of the sectors, considering this has been a story we've been talking about for months now? The energy needs are absolutely incredible. I mean, we have the nuclear companies that are coming out big when it comes to nuclear energy. In fact, we're going to take you live coming up. Max Gordon, our reporter, is at a brand new Oklo one. And so, you know, why is it still so cheap?
Liz, we're back to the future. You may not remember this, but I remember it like yesterday. I was on your show in 2020 during COVID, remote, and the weight of the energy sector went down to a historic low of 3%.
Oh, I remember oil went negative.
Oil went negative, and I was pounding the table to buy ExxonMobil at $33. Okay. This is the first time since 2020 that the energy sector is down to 3% weighting in the S&P 500. Every time you've taken a bid when it's that forgotten, you've made tremendous amounts of money over the next 12 to 18 months, and we're moving into a seasonally strong period for energy stocks.
Yeah, for those of you who are saying coulda, woulda, shoulda, ExxonMobil right now at $112 a share. Yeah. Let me shift it to what should be given a lot of credit for the records that we are seeing right now for the Dow, NASDAQ, and S&P, and that is a quarter-point cut last week by the Federal Reserve. You got a whole host of Fed heads who are speaking today.
Yeah.
A bunch of them, including Stephen Myron, who was the one dissent. Yeah. He felt it shouldn't be a quarter-point cut. It should be a 50 basis point cut.
Yeah.
What do you think that says to the psychology of the markets?
This is very constructive because historically, when you're cutting into an expansion, and we're showing no signs of recession, a little weakness in the labor market, but GDP growth is still positive. 4 cuts to 5 cuts, that on average, the market's up 16.1% 12 months later.
12 months after.
12 months after. So this is very, very, very constructive tailwind. We also have consumer sentiment that's washed out to the greatest extreme since 2020 and since the great financial crisis. 12 months later, in those extremes, consumer sentiment washed out. S&P up 26.1% on average. So there are a lot of tailwinds here, but we do have Sel Rosh Hashanah by Yom Kippur. End of September tends to be a little bit weak.
Yeah.
So we'll see what happens in coming days. If you get some bumps, don't worry, it's just seasonal.
Yeah. For those of you who don't know, that's an old saying down on the floor of the New York Stock Exchange.
On average, S&P down 0.5% during that period.
Right. The Jewish New Year, of course.
66% of the time.
Okay.
Yeah.
Happy New Year to our Jewish friends.
Exactly.
Tom, good to see you. Thank you very much. All right, one of the world's biggest sportswear makers